Hey guys, welcome back to the channel. Today we are going to learn two of the most useful cost estimation methods in managerial accounting. I promise after this video, you will be able to estimate costs faster than your manager can say budget variance. Let's go. Okay, first method, the famous high-low method. The method is literally what it sounds like. We only take the highest and lowest activity levels, and boom, we estimate the entire cost function. And why? Because we assume the change in total cost between these 2 points comes from variable cost. Here are the steps, very easy. First one, pick the highest and the lowest activity levels, not the cost. Second, compute variable cost per unit, change in total cost divided by change in activity. And the next, plug it back into the formula to get fixed cost. Last one, final cost function. Total cost is equal to fixed cost plus variable cost times activity. Easy, right? Let me show you an example. High point is 40,000 hours, which is $100,000. Low point is 20,000 hours, which is $60,000. So step one, variable cost is 100,000 minus 60,000, and then divided by 40,000 minus 20,000, which is gives us $2 per hour. Step two, fixed cost, which is 100,000 minus 2 times 40,000, which gives us $20,000. So our cost function is total cost is equal to 20,000 plus 2x. Done, easy. And the next method, account analysis. This method is much more accountant style. Instead of using only 2 points, we actually analyze the cost accounts directly. So what do? We look at each cost account, utilities, maintenance, supervisor salary, supplies, and then we classify it as fixed, variable, mixed. For mixed, we split into fixed plus variable parts. Once we have that, we just build the cost function using the totals. Example, factory utilities is 10,000. 40% is fixed, 60% is variable. So activity level is equal to 4,000 units. Variable cost per unit is 10,000 times 60% and divided by 4,000, which gives us $1.5 per unit. And then fixed cost is $4,000, so the cost function will be total cost is equal to 4,000 plus 1.5x. Okay, quick recap. High-low method is fast, simple, but only uses 2 points, not always accurate. And account analysis is more flexible, more realistic, but depends on accountant's judgment. If you are studying for accounting, CPA, CMA, or just love learning, these two tools will help you build cost functions in seconds. If this video helped you, make sure to like, subscribe, and drop a comment saying what topic you want next. See you in the next video.